Mexico's economic crisis deepened today with stocks dropping sharply and the peso still under fire. A government austerity plan announced yesterday and billions of dollars in assistance from the U.S. and others apparently have not bolstered the confidence of investors. Here's ABC's Bob Jamieson.
There was such panic on the Mexican stock market that some brokers advised their clients to sell regardless of the loss. When the trading ended, the market had lost another 7% of its value. This year alone, Mexican stocks have fallen 20%. A similar loss here would equal a 750-point drop on the Dow Jones Industrial Average.
At one point, the Mexican market looked like a meltdown.
That was only one blow to Americans who had $53 billion invested in the Mexican stock market before the crisis. The peso also continued to collapse. It has lost 40% of its value to the dollar in the last 3 weeks. And the crisis has grown despite $10 billion in aid from the United States and Canada, Mexico's partners in NAFTA. It erupted when the government of new President Ernesto Zedillo announced wage and price controls and spending cuts to deal with Mexico's economic problems. The country has a growing trade deficit, huge foreign debt, and soaring inflation. It also has $7 billion in short-term bonds coming due in the next 3 weeks, much of them held by American investors. Economists say that should not be the only concern about America's second biggest trading partner.
Mexican goods will be a lot more competitive in the American market, and American goods will be a lot less competitive in the Mexican market, which could cost jobs for American companies selling into Mexico.
This economic turmoil is hardest on Mexico's population, and officials worry there will now be a sudden increase in Mexican migration to the United States, which will put even more pressure on the American job market. Bob Jamieson, ABC News, New York.
In Washington today, President Clinton said that the economic crisis in Mexico is far too severe and its impact on the U.S. far too important to wait for Congress to make up its mind. And so Mr. Clinton has acted on his own to shore up Mexico's currency, the peso. He reached into a special government fund for which he needs no congressional approval. At the White House tonight, ABC's Britt Hume.
Congressional leaders were summoned to the White House this morning, where the president informed them privately in a meeting in the cabinet room what he had decided to do about what they had told him last night, namely that Congress might eventually approve that $40 billion loan guarantee for Mexico, but not anytime soon. The president announced what he decided to do publicly later in a meeting with the nation's governors.
Because Congress cannot act now, I have worked with other countries to prepare a new package. As proposed now, it will consist of a $20 billion share from the United States' Exchange Stabilization Fund, which we can authorize by executive action without a new act of Congress.
That $20 billion in reserve U.S. funds the president decided to use for Mexico is only half the amount he had asked Congress for. But combined with more than $17 billion in additional funds the administration rounded up from international lending institutions, officials said Mexico will have about the same total amount to help stabilize the sinking peso.
In our judgment, the financial distress had reached the point where it was absolutely imperative that the president act, and act now. And that was very much the president's view and the view of the bipartisan leadership this morning.
Relieved congressional leaders were only too happy to confirm that.
I'll be sending a letter to the president this afternoon along with Gingrich and Tom Daschle and Gephardt, in effect supporting the president's position, so he won't be out there by himself.
Dole and other congressional leaders like this new Clinton plan because of what it does do and what it does not do. It does help rescue Mexico from a financial collapse they believe could have shaken the U.S. economy. But it does not force Congress to vote on what looks suspiciously to the U.S. public like a $40 billion taxpayer-financed bailout. Britt Hume, ABC News, the White House.
Well, the news that President Clinton was acting now gave the Mexican stock market and the Mexican currency quite a boost. And this is important for the U.S. economy. ABC's John Donvan explains the connection.
Mexico was supposed to be one relationship the White House and Wall Street could sit back and enjoy. Then a year ago, the trouble began. An armed rebellion in the Mexican South. A candidate assassinated during Mexico's presidential campaign. As nervous foreign investors pulled money out of Mexican stocks and banks, the Mexican government began spending its dollars to buy pesos to keep their value high so Mexicans could continue to spend their way toward a better standard of living. But last month, the Mexican government ran short of dollars and the peso crashed. So did Mexico's stock market. And 92 million Mexicans, who as a nation represent America's third largest customer, had lost nearly half their purchasing power overnight. Mexico's troubles have crossed the border already, with tens of thousands of American jobs at stake in companies that make products Mexicans buy. With the peso's value reduced almost by half, they're buying a lot less. At Bourbon Incorporated, for example, which ships rawhide south from San Antonio.
I have stopped practically delivering hides to Mexico. That's it. Because of the money not coming in for the hides that they owe me in Mexico.
His business is down 40% this month.
The business can shut down. And it's a small business, and there's a lot of other small businesses in the same situation.
Big business is also getting hurt. Walmart, the largest retailer in America, has halted a 25-store expansion into Mexico since the peso crashed. And Chrysler says its sales in Mexico are down 75% for January. That threatens thousands of American auto workers who make parts for Chryslers sold in Mexico.
It has a ripple effect onto the other parts of our business. It may not be easy for people to see that, but I can assure you it is real.
And while the president is warning of the risk to jobs, thousands of Americans have also invested up to $20 billion in Mexico's stock market. Not only Wall Street firms, but many small investors and pension plans who own shares in mutual funds that buy Mexican stocks and bonds. That puts people's savings at risk.
I can't afford to wait out for it to straighten out, which is why I had to sell my stocks.
Wall Street and the White House share this nightmare, that the turmoil in Mexico will spread to other developing countries, hurt their currencies, and affect even more American workers and investors and the U.S. dollar. It is the domino theory applied to Mexico, money, and markets. John Donvan, ABC News, New York.